Hello and welcome to another daily market update by Market Intel. Today we want to take a look at the ADA Cardano chart. It's been in a correction for quite some time, but it's actually holding quite well compared to many other cryptocurrencies. So we'll take a look at the chart now. Let's go. We are now on our website, dailymarketupdate.com. If you're interested in additional updates, make sure that you follow the link in the description. You can register completely for free and you get access to all of these updates, including ADA, obviously Fetch AI, Decentraland were covered as well. There are many more that we cover on a daily basis. Today, we want to take a look at the ADA chart, Cardano on the 2-day time frame, larger time frame. We'll start with that. Then we will take a look at the shorter chart, or shorter time frame chart rather. And what is important is I think that we should start with a bigger picture, with a larger time frame anyway, to get an understanding of whether those targets, those long-term projections rather, that we talked about in previous videos, are they still relevant? And I think so. So what we see here on the chart is that the third wave could still be unfolding. Nothing got invalidated. Okay, we need some patience with these movements. We have to let the market breathe. So the structure still allows for an ongoing third wave, even though the move up is of course very, very choppy, very messy. So we'll see how that all comes together. We'll also take a look at the shorter time frame in a few minutes to get an understanding of, how is this built? What's the structure behind this? But it's still important to understand what are these long-term projections. So first of all, there's a very, very important key level on the larger time frame, $2.51. A break above this level could unlock prices in the region of $5.27 plus. So we've got 5.27, 5.87, maybe even 6.83. This is very long term. And first of all, we need to see a break above 2.51 to really confirm that we're on our way into this long-term target area. How long will it take? Impossible to say. Please don't use the timeline down there. If we could delete it, we would. But yeah, it's not going to happen tomorrow. It is something long-term, and there will be a lot of corrections along the way. And the market is not getting easier. With all of these cryptocurrencies being thrown onto the market, money is just, it's sort of diluted. That's the problem. It's far less concentrated than it was in the past. All that money has to go somewhere, and the cryptos certainly have difficulties in this market as it seems to recover and to start that significant rallies. Now, ADA is definitely trying. I mean, we had a rally into the November, December highs, and that's where the market topped at around $1.32, at least short term. Locally, that was a wave one. Then it's possible that a wave two bottomed in February in this grayed out support zone. We had a good reaction, but it was only a 3-wave move up. That was, I think, the Trump comment about a crypto asset reserve, digital asset reserve, that pumped the price short term, but we fell back into the range. It was not a sustainable rally. And the $1.32 level up there is not broken. That needs to be broken to confirm that we're actually rallying in a third wave. At the moment, we are likely still caught in this correction that I'm labeling as wave 2 here. And we're tracking this as a W, X, Y, X, Z pattern. That's one interpretation. That X wave is a bit high, but it's valid. Other interpretations, I can think of maybe a triangle, but then it should not make another low. So we still have to allow for potentially another low. This is not impulsive to the upside, so we have to be mindful. While it could be in this low, we assign that a 40% probability. All I can say is this rally is only in 3 waves. Everything just corrective to the upside, not yet any impulsive price action. Therefore, we prefer here one more low. And once we get a little bit more price action, we can maybe be a bit more precise with regards to the target. However, what I can tell you, the market should not break below 31 cents in the process. It should not break below that 31-cent level. It would invalidate the 1-2 setup. So probabilities of a direct breakout, could we go up directly straight away? Yes, that's of course possible, but we would assign only a 40% probability. We assign 60% probability for another low before a recovery, and a break above $1.32 is really needed to suggest that wave 2 in blue is over and a third wave has started. And then it could take us to 150, 160, 170. Actually, if it's a third wave, probably into the $2 plus region. And that could be the first step of confirming that really this larger degree third wave is unfolding that we talked about on the larger time frame. So I think again, this chart has been in a correction for quite some time. It's getting frustrated. Markets sometimes are frustrating, and we just have to be patient. So I'll keep you updated. If we see any further insights, price data that's noteworthy, we'll let you know. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on our website. As I said, it's completely for free. You'll find the link in the description. Thank you very much. Bye-bye.